Crap, guys, not the best start to the week at all when it comes to SoFi stock. Check it out. It's currently around 12:30. Yeah, about 12:30 p.m. on the East Coast, right in the middle of the day pretty much. And we have SoFi stock down around 8%, down 40 cents, back under $5 per share. So in this video, we're going to break down the charts. We're going to talk about what I'm doing with SoFi stock, and we're going to go over why the stock is falling today. So if y'all find value, hit that like button. Make sure to subscribe. And if you guys want some free money, up to 15 stocks from Moomoo, each up to $2,000. Use that link down below, or simply go to stassurfest.com/Moomoo. Once you guys open up an account, you get one free share of stock right off the bat. And once you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. And listen to this, guys. Once you fund your account with at least $1,000, you get 10 more stocks, totaling 15 free stocks. So if you guys want some free money and you want to help out the channel, again, use that link down below, or go to stassurfest.com/Moomoo. Get your stocks. I appreciate you guys as always. Cheers. And with that being said, let's dive into the video. So again, SoFi stock is down around 8% right now, down 40 cents, back under $5 per share. And this is after we got news that SoFi stock has gotten downgraded by Wedbush. Let me actually pull up the article very quickly before we break down the charts. Give me a second, guys. Let me make my big old head a little bit smaller. There we go. And actually, let me pop it up here on my side of the screen. So we can see SoFi Technologies, ticker symbol SOFI, and of course they're on the NASDAQ. If you guys didn't know, their shares were down more than 6% in the pre-market, which now they're down even more. Like I said, down 8% after Wedbush analysts downgraded the stock to underperform from neutral, cutting the price target in half to $2.50 per share. Unbelievable, guys. So their price target, I guess, was $5 before. Now they cut it in half. It is $2.50, and the analyst told investors in a note that fair value accounting may present headwinds for the company. And the personal finance firm's share price is now trading around $4.70. It's actually $4.60, but when the article was written, it was at $4.70. And the analyst explained that the firm believes SoFi may be nearing a tipping point on the fee income it recognizes related to loan origination and sales, while capital levels may be overstated using fair accounting, or rather fair value accounting, and they think the company may look to raise capital this year to support growth, which means, well, they're going to, issue more shares, which means the existing shareholders will be diluted. So, I mean, that's not too far-fetched. That's not too surprising. I mean, this company is still growing, and what do growing companies do? They raise money. They issue shares so more people could get a piece of the pie, but again, that dilutes the existing shareholders' pieces of the pie, if that makes any sense. And you guys can see here in a hypothetical analysis in which we applied the held for investment CECL accounting methodology used by Lending Club to SoFi's financials would result in SoFi's tangible book value being reduced materially by 60 or nearly 60% on an apples-to-apples basis to $1.27 from the current $3.05 a share they added. All right, pretty interesting there. I mean, it looks like clearly the stock is way overvalued in the eyes of Wedbush, the Wedbush analyst there. But to play devil's advocate, guys, a lot of analysts are still very bullish on the shares, and they think the shares are undervalued. A lot of analysts actually have buy targets and higher price targets than where SoFi is today for the stock. I mean, that's pretty obvious. We've seen, mixed opinions here on SoFi, and clearly Wedbush is bearish right now. And they explained that they do not expect SoFi to change their accounting methodology or reduce their fair value mark assumptions in the near term. And however, we believe regulators may look at SoFi's accounting and may suggest to SoFi to operate under a more conservative capital requirement framework that contemplates a hypothetical switch to CECL accounting, given SoFi is more comfortable holding loans to maturity rather than selling them, the analysts wrote. And we expect, according to the analysts, regulatory scrutiny on capital ratios and stress testing to intensify following the failures of SIVB and FRC, which of course Silicon Valley Bank, and FRC is First Republic. So are they going to switch to a different, framework here, CECL accounting? I have no idea, and I'm not going to just sit on here and pretend like I know exactly the ins and outs of this, but, that is what's going on, and that is why the stock is falling, and that, sometimes is all it takes for a stock to go down, at least in the short term. All it takes is an analyst to be like, oh, we're cutting the price target. We're putting this rating here from a buy to neutral or underperform, right? That's all it takes sometimes for short-term, for a short-term drop. And that's exactly what we're seeing here on SoFi stock, as again, now it's down roughly 8%, 7%, and it's back under $5 per share. Now, what you guys have to realize is just because an analyst, a firm, a bank, whatever, just came out and said, oh, we're cutting the price target, we're, putting an underperform rating, just because they do that doesn't mean the company is going to fail in, the long term. Sure, there could be some short-term headwinds that clearly Wedbush is, outlining based on, what we just read. Sure, they can believe their short-term headwinds, but that doesn't mean the analyst, the firm's 100% right. That's going to be the case, and it's going to fail or, go down to $2.50. It's just a guess, guys. It is, a prediction, in other words, and, long-term, SoFi could very well do very well. It could very well be fine. And again, a lot of these analysts do have buy targets, buy ratings on SoFi, and just because one of them doesn't, that is why, it's causing a little bit of shock here in the short term. And you got to realize this, and I'm not saying Wedbush is doing this, but a lot of these big institutions, firms, banks, whatever you want to call them, they sometimes manipulate the markets. Yes, shocker, right? They manipulate the markets, and let's say they want to go long SoFi, they might put a bearish rating on it. They might cut the price target and make money on the downside and then, buy the shares up when they get destroyed. Let's say SoFi goes down 20% this week on, this call here that Wedbush has or whatever. Let's say hypothetically it does. They could buy into that weakness and ride it for the, for the relief rally, which ultimately I think we will get a relief rally on SoFi. The question is, when will that happen? I don't know. Time will tell. But in my opinion, this is overblown. I think this company has a bright future. Sure, there's a lot more scrutiny now amongst these personal finance, banks, financial institutions, whatever you want to call them, because we're seeing a lot of them go under with the whole regional banking crisis that we're experiencing right now. But I believe SoFi could have, a rebound move here in the short term, right? And like I said earlier in the video, guys, I believe long term SoFi does have potential. They're just going through some short-term, very short-term turmoil here. And you guys can see this company reported earnings about a week, 10 days ago. When was that exactly? Let me see here. On the, when was that? The 30th? No, not the 30th. It looks like they reported, that's right, on the 1st of May. So about 2 weeks ago, 2 Mondays ago, they reported, and this stock has been destroyed ever since. It went from $7. Now it's at what? $4.60. The low on the day was roughly $4.50. So it's down roughly 35% from that peak right before the earnings came out, or right around that time period, right? So this thing has gotten destroyed, and now it's getting hit even more, now down 7%. So I'm in the camp of we're going to get a relief rally. I think that's going to happen. Here you guys can see on the 4-hour time frame, we are at the bottom of this channel, right? The downwards channel, whatever you want to call it. We've been in this for a couple of months, and it looks like last time we got this oversold, it didn't happen very quickly, but we did rebound and see some gains in the week, in the couple weeks following that major drop, which last major drop we had was, I guess back when earnings came out. Then we saw a nice relief rally last week, but before that we saw SoFi go from $7 roughly all the way to $5.15 right in here, and then it rebounded up to about $6. Then it had the pop before earnings, and here we are. Now we're at mid-high fours, and sure, it could get hit even more in the short term, maybe lower mid-fours, but to be honest, guys, in my opinion, this is all my opinion, I don't see it going much lower than low to mid fours, at least in the short term. We can see back a couple months ago, we hit 425. That was in early December. So I don't see it go much lower than that. I could be wrong. Who knows? But I think a relief rally is in the cards here, whether it's at 450, 460, 445, maybe for a move back up to the low mid fives, maybe higher. That's what I believe. So what do you guys think? Let me know your thoughts down below in the comments. Hit that like button. Feel free to subscribe. And guys, before you click out, don't forget to get up to 15 stocks from Moomoo, each up to $2,000. Just use that link down below, or go to stassurfest.com/Moomoo. Once you open up an account, you get 1 free share of stock right off the bat. And once you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. And once you fund your account with at least $1,000, you get 10 more stocks, totaling 15 free stocks. So if you guys want some free money and you want to help out the channel, don't be shy. Use that Moomoo link. Check out my Patreon as well while you're at it. And you could also get 12 stocks from Webull, even more free money. And with that being said, cheers, guys. I'll catch you in the next video.